Hello, viewers. Good morning, good day, good evening. Uh, Depending on the time you're catching this broadcast, it's Pedro again, and it's been a while. It's been a while. It's been a really long while, and I want to wish you guys a happy New Year. And I sincerely want to apologize once again for being out for so long. It was never my intention. I had serious challenges trying to sort out a lot of things, and I've been trying my optimum best to get back on track with you guys, because a whole lot has happened within the past couple of months that I've been away. There's been a whole lot happening, and this is a time when you shouldn't be in the dark, and this is a time when I should be there for you when you kind of needed me the most. But unfortunately, here I am. They say man proposes, God disposes. It was never my intention to leave you guys in such dark times. I wanted to really be there for you guys, but unfortunately, first is beyond my control. So I really want to apologize, and I hope that I don't have to stay out this long again. So I'll be diving straight into action. I'll be giving you guys, I'm going to be doing a whole lot more this time. I'm not just going to be focusing on the crypto market, on the Bitcoin market. I'm going to be focusing also on the Forex market as well. So this is going to be a whole lot. I just hope that you guys would get a ton of value from this. So without wasting without any further ado, I would like to head straight into action by first of all starting with the Bitcoin market, the Bitcoin chart. We have been in a downtrend. Well, we have been in a downtrend ever since the all-time high achieved on November 10th of 69k. We have been in a downtrend ever since. The market have been producing or generating successive higher highs and higher lows. That is the main or the key trade for a downtrend. The reverse is the case for an uptrend. So if this happens on at least the daily time frame, then this can be classified to be an established downtrend. Why this may be possible on smaller time frames like the intraday time frames, like the 4 hours or 1 hour, this may not be enough to be classified as a downtrend. A downtrend should be classified. A trend is definitely defined mainly from the daily time frame. Daily time frame is the key. Is enough to define a trend. So this has been the case since we made the last all-time high, the latest all-time of 69k for Bitcoin, and as usual the entire market has followed suit, and we're at a very critical point where it seems as if we'll be headed further downside. Now the question now beckons, at this point where we are now, what was the next step for Bitcoin and the entirety of the entire market? And one thing I would like to say is that it's easy how to kick a man when it's down rather. And so far Bitcoin is down, and so there's no the tendency for we to expect it to go further down south is there. But one thing I've come to understand about this market is
the more you expect what the majority thinks. Most times 7 or maybe 8 or 9 out of 10 times the reverse is usually the case. And if you understand price action properly and you understand the basics of support and resistance, then you should not be among the majority of guys calling for the further downsides for the Bitcoin and the crypto market as well. So currently we're sitting at a major support. I'm going to be sharing this in a bit, how Bitcoin currently sits on a major support. And like I've said in previous presentations, I've made made emphasis on the fact that people tend to, or majority of the market tends to get excited at the top, which is at as a resistance of a market, and they tend to get panic. They tend to panic at support. So that has always been the case. If you understand the psychology of humans, that has always been the case, and that will always be the case. It will never change until the end of time. Human psychology will always be the same. That is one thing that is constant in this market, and that is one thing that you need to understand about the market. And once you do that, the market will be your playground, and you have no reason to worry or panic whatsoever. So that is also the case as we stand now. And contrary to the views of the market majority, the market itself is proving them wrong and is doing the reverse. And how long the market will be able to hold on to this, only time will tell. No one can tell exactly if the market will continue to clear people's doubt and do the reverse of what they are expecting from the market. Only time shall tell. So for now, that is the case. The market is doing exactly the opposite of what people are intending or expecting it to do. People are exactly the opposite of what people are expecting it to do. So I'll be showing you that right away. Not too much of the talk, not too much talk anymore. So I'll be heading straight into where Bitcoin is and the entire crypto market, and what is the likely scenario and why it is the likely scenario. So Bitcoin has, against all odds, at this point where we hit 69k, we were in no man's land. We were at an all-time high, which means a region where Bitcoin has never been to before. And then, as usual, there was a whole lot of excitement at the top, and people were already calling for different upside target of 200, 300, 400, 500. There were even calls for $1 million for Bitcoin. And then these were the times where I had to sit back and study the market and then see what the charts were actually telling us. And I could see that the reverse were already the case. I was already seeing signs of 40-something, a downside of 40-something, of which I was called all sort of names. But here we are in the 30-something K region, and here we are again. So Bitcoin has moved. This is 1, 2, 3, this and this, this and this. These are all I'm going to be using a pen to do this so you can see for yourself. I'm using a pen of some sort. Just a second. I'm using a pen to do this so you can clearly see for yourself. Using maybe an arrow to demonstrate. Okay, we could use this. So Bitcoin is doing this. Kind of has moved to this point. Okay, there'll be no need for that. Okay, so I'll be using the retracement tool to show you why the reversal may be imminent, and this may not be entirely true because no one knows exactly where the market is going, but from what I can see, the market seems to be like showing signs of a reversal. Yeah, the reversal is more likely here, and for the fact that the majority of the market is in a panic mode. There's a whole lot of fueled in the market, fear, uncertainty, and doubt as to the market crashing down to, people are even calling for $5,000 Bitcoin at this point, which is very, very expected, as given the fact that people will definitely, there'll be a whole lot of panic at support and the excitement at the top. So we are at a bottom. If you follow this swings, I need to get a good, the way I used to do this. I need a good highlighter, something of to get this out. Okay, no problem. I'm just gonna be, so here is our last swing high from this downtrend, and this point to this point, we had to retrace. Since we're in a downtrend, we moved from this point 43.59, okay, 91. Good. So on getting to this point and forming a new lower low with respect to the last one, the market had to retrace before heading further down south, making the next impulse move further down south to form a new lower low. I'm going to be taking off this line so we can see this clearly. Good. So the market has moved, starting from this point of 69k, which was the all-time high. Market moved to this point, and this was the first impulse move, major impulse move, the retracement of about 38.2%. If you use the retracement tool here, you will realize that this is about from this point to this point. This retracement is, you can see this retracement is 38.2%. So the market didn't even give the bulls very much chance, enough chance to retrace, just 38.2 before making this other huge impulse move again. Good. So the market made another impulse move, and then it retraced again for about 60% retracement. Good. Roughly 60% of retracement, and then it made another impulse move from this point. Next impulse move came here, 52. Here's the next impulse move to 39. Here's the next impulse move of about 38, almost exactly, it's like exactly 38, about almost 38.2%, and then if head further down south again and formed a new lower low. So from this last lower low, we can see that the market, after forming this last lower low, the market had to retrace again before forming a new lower low, and you can see clearly. Let me take off this so you can see this clearly. This is the last lower low. This is the last lower low of 32,937 coming on January 24th, and then the market has to retrace before making a new impulse move, which would give us the next lower low. Market retrace over, you can see this is the point, the last lower high, the last retracement, the previous retracement coming at around 44,445, and the market retraced to 46k, 45,899. That is an over 100% retracement. That is 1 point. The market had to do that contrary to the previous retracement occasions, when the market had to retrace a certain percentage below 100%, 38. The highest we had was 61%, 60%, so thereabout. We had a couple of times where the market had to retrace for 38.2% before heading further down south again via a new impulse move. But this time around, the market had to do an over 100% retracement. Now that is a sign that the bulls were, the bears were losing momentum. We had this, so from this point, the market was to head further down south again and make a decision, form a new lower low, and continue the downtrend. But unfortunately, this happened on 24th February, which was exactly 1 month after the first, coincidentally, exactly 1 month after the first lower, the last swing low. The market was unable to form a new lower low. The market rather formed a higher low, 34.425. okay, so you can clearly see a higher low being formed, and then the market has tried to, and in doing this, the market is forming a, at this point the market was actually forming a potential reversal pattern, which is a double top. Now this is a valid double top for me, because anything that falls, any test of the close of this bullish pin bar candle, the open of the candle coming at around 36.3233, and the market went further down to 34. So this to me is a valid double bottom, because the market was unable to close below the low, this swing low. It was also unable to form a new lower low. So this is a valid double bottom. The market has gone up again, and it had to make a decision to validate the double bottom pattern. It had to close above this top, coming out almost with 46k, 45.9k, which it failed to. That place is acting as a serious resistance because it's a pivotal point. It's the neckline for this double bottom pattern. It is also in confluence with the last swing high for the market to beat. So for the market to form a new higher high, it needs to beat this last high, this last swing high. So it is not just the neckline for this reversal pattern, which is a double bottom pattern. It's also the neckline that it has to, it's also the swing high it needs to be to form a new higher high, and hence the reason why the market is reacting to this point. So despite the huge buying momentum, on getting to that point, there's been this loss of momentum from the bulls, and hence the reaction, the opportunity for bears to take over and resist, and result to this sell-offs we are currently experiencing. So we're heading further down south again. So we're more like stuck in this consolidation between this point and this. So the market has to consolidate within these two regions, after which it has to break out. So a consolidation takes place, after which the market breaks out in whatever direction. It may be to the north side or to the south side. No one can really tell until the market decides on where it wants to move. But so far so good. The bulls are holding on, first of all because we are sitting at a major support, and then the market is forming higher lows in the process. The market is also trying to form a potential reversal pattern. So it seems to be like a double bottom, but it may also likely be it can also result to a triple bottom as well, or we may just see another higher low. The market continues with this consolidation until it breaks out of it, either to the north or the south. But so far the trend is still a downtrend. We're currently one consolidation, and the market is likely going to break out either to the north or to the south. We are not sure, but the signs are looking like it's going to be to the north. The signs are looking like a reversal sign, but only time can tell. So I think that will be enough for Bitcoin. If there's any other thing, I'll be adding as time goes on. I would be also talking a little bit about the forex market, and my center would be, I'll be making so much emphasis on the DXY. The DXY is the dollar index. It's the chart that shows the strength of the dollar, and so far so good. We've had this ascending uptrend channel that's been dating back to May 2021. It's getting close to a year now. The dollar has been very bullish, and at least from a daily time frame perspective, and as a result has really bullied the other forex pairs. The other forex pairs have been down respect to the dollar, and it is because of the enormous strength the dollar has shown in this past months that the Bitcoin market and the crypto market as well has also been struggling. The reason why the dollar is very the performance of the dollar is very crucial to the performance of Bitcoin and the entire crypto market is because Bitcoin, as you can see, is measured against the dollar. The value of Bitcoin is measured against the dollar. The dollar is the world reserve currency, and as a result, if you understand pairs, currency pairs, if Bitcoin is BTC USD, as you can clearly see here. That means BTC is the quote currency, while USD is the Bitcoin is the base currency, while USD is the quote currency. This means that for one to be they are kind of they affect each other. The performance of one affects the performance of the other. For one to for one to be strong, the other one needs to be weak. For Bitcoin to be strong, USD needs to be weak. For USD to be strong, BTC needs to be weak. So Bitcoin, if USD is strong, then Bitcoin is going to be down, and that has been the case. USD has been so strong, it shows signs of weakness at some point, and
but it was at the end, it was just a case of a mere retracement from the US dollar, and the Bitcoin markets reacted as well in like manner. These were periods where the DXY, the US dollar, was showing signs of weakness via a retracement from this point, and we had Bitcoin and the crypto market reacting in like manner. But you can see this past week, you can see that the DXY, the US dollar, has been so strong. It has broken out of a trend line that has been on that has been established ever since May of last year. It has broken clearly above. There was a whole lot of resistance, and it seemed like the US dollar was finally going to get weak after a very long time of a prolonged time of bullishness and strength, optimum strength. It has refused to bow to all the bearish pressure and resistance coming at the top of this channel, and it has broken out to the upside from this channel, and it seems to be flourishing so well. So time will tell if this is going to be a false break, or if it is going to continue higher. And you can see I will be showing you more signs of an imminent weakness from the US dollar. You can see the RSI on 28th January, when we formed a new higher high respect to the last one that was formed on 24th November. We formed a new higher high, but the RSI was weak. We had a bearish divergence from the RSI, so these were signs that market was going to be weak, and this happened, albeit just for the interim, because it was just a mere retracement and not a trend reversal. So you can see that despite the bearish divergence from the RSI, the dollar only seemed to be weak just for a week. It was just a mere retracement and not a trend reversal. And this bearish divergence was also clearly evident on the weekly time frame as well. So it was clearly this is kind of slow. It was clearly evident on the weekly time frame as well. You can see clearly here that's despite the new higher high, it was a clear, very obvious bearish divergence on the weekly time frame, even more evident than that the one formed on the daily time frame. And then all the signs were showing were pointing towards an imminent reversal from the US dollar after a very prolonged period of strength. But you can see that this only seemed to be a mere reversal and a mere retracement rather than a reversal. So the next major resistance is coming at around 99.6 for the US dollar index. So only time will tell if this is just a mere false break, or the US dollar will continue to strengthen to this point. And if this is to be the case, then it has bad news for Bitcoin and cryptos as well, and forex market as well. I'm going to be showing you the result of the US dollar strength, what has been the outputs on other currency pairs, and it has been very evident. In fact, the US fortunately for the Bitcoin market, despite the enormous strength shown by the US dollar in recent times, the Bitcoin market has seemed to react so well. It has been able to absorb the pressure and behave, be calm in time in the midst of the storm. And you can see the Bitcoin market has, rather than form new higher highs, is rather forming it's forming a potential reversal pattern via this double bottom, and even forming higher lows in the process. Unfortunately, that has not been the case for the forex pairs. This is US Euro USD, the most traded currency pair, forex currency pairs in the world. When the after the February 24th huge sell-off, it seemed to be also forming a double bottom. Unfortunately, the following week, which was we just closed a couple of days back, US dollar strengthened more further, and this happened to the Euro USD. It was further sell-off. So this has completely invalidated the double bottom reversal pattern. We have formed a clear and very obvious new lower low. The bearish divergence has been the bullish divergence has been invalidated. You can see it has broken below this divergence line, uptrend line, and we are currently in oversold territory, and far below the divergence bullish divergence line. I'll be switching to the weekly time frame so you can make more sense to you as well. So the euro has been the most affected currency from the strength of the US dollar. This is the weekly time frame for Euro USD, and you can see how bad this has been. It has broken through. It is currently trading below a trend line that has been a downtrend line that has been up since 2008 or so. I'll be heading to the monthly time frame so you can take a look as well. So the whole drama about the strength of the US has been more focused on the euro than any other currency pair or any other risk assets as well. So this is a downtrend line that has been on since July 2008, and it finally broke out of this trend line on July 2020. That's after 12 years. So it's been trading above this trend line until this past week. It has broken back below this trend line. So it's been a massive sell-off on the euro. It's been a huge sell-off on the euro. I'll be delving to other pairs so you can see the effect as well, and you can see that the effect has not been as much as that of the euro. This is the GP, Great British pound. You can see there's been a huge sell-off as a result of the US dollar strength, but not as bad as that of the euro. So the week summary of the week has been more centered on the euro. This euro to me has been like the summary of the week. The target has been on the euro more than it has been on other risk assets and currency pairs. So I'll be switching briefly also to Euro JPY so you can see how obvious this sell-off. You can see that this has been a targeted operation on the euro currency. You can see this is the weekly time frame as well for Euro JPY. A massive sell-off that has broken below a consolidation bottom that has been around, that has been formed ever since March of last year, which is a year ago. On the weekly time frame, you can see that the currency pair has been in consolidation until this past week. So this past week was actually targeted at, this is the daily time frame, this was the last day sell-off. So it's breaking barriers, breaking support barriers, and not just in dramatic fashion, dramatic fashions. So it's invalidating all signs of all previous forms of a reversal of imminent reversals in the past. So the summary of the week has been about just the euro. So you can see even here, this is another downtrend line that has been on since July of 2008.
It's currently breaking below those trend lines. Everywhere the euro has been bloody. It's been bloody for the euro for this past week. So that's I've said so much. I didn't even expect I'll be on for this long. I'll be taking a break for now from the currency market, from the financial market update. I hope you got value from this analysis, and if you did, just feel free to let me know in the comment section. Do well to also like, share, and subscribe to this channel to get more analysis, unbiased, unfiltered analysis like this. And always remember, as usual, that whatever I put up here is for educational purpose and not to be treated as financial advice. Forex and crypto and all financial market trading is rather risky affairs, and you should always endeavor to carry out your own research before entering any trade. God bless you all. Do have a lovely week ahead, trading week ahead. Bye bye.